Hello everyone, this is Robert Acevedo, the FIRPTA specialist here at Freedomtax. And today we're going to be talking about FIRPTA, which some people could find quite complicated. But if you stick with me, I'm going to make this FIRPTA topic super simple to understand. What does FIRPTA stands for? FIRPTA is Foreign Investment Real Property Tax Act. And if you ever wonder how foreigners get taxed in the US, that's what I'm here to show you today. So the FIRPTA law was passed in 1980, and the purpose of it was for the US government to make sure that foreigners pay taxes on profits from selling US investments or real estate. Before FIRPTA, a foreigner could sell US investments or US interests and not have to pay any tax. And the US government, the IRS, was missing out on all of that tax revenue. Once FIRPTA was put into place, all of this changed. Now, why does FIRPTA matter to you? Well, from the seller's perspective, if you are a foreign seller of US real estate, you are going to be subject to the FIRPTA withholding. Now, from the buyer's perspective, you want to make sure that if you are buying from a foreigner, FIRPTA applies, and you want to make sure that you follow IRS procedures to avoid any possible penalty. Now, why does FIRPTA apply to you? Well, from a seller's perspective, you could be the one who's subject to the FIRPTA withholding and want to make sure that you took the proper action to possibly recuperate those funds. From the buyer's perspective, the IRS does hold the buyer responsible for the FIRPTA withholding, and you want to make sure that you eliminate any possibilities of penalties for non-compliance. FIRPTA also can greatly affect how real estate transactions are structured or the flow of them. Now, who does FIRPTA apply to? Bottom line, foreign person or entities, be they corporations, individual, or partnership. If they are foreigner, FIRPTA could possibly apply. Now, when do we actually see FIRPTA in a real estate transaction? Well, what the IRS requires is that the buyer withhold generally 15% of the gross sales price from the seller at closing, and these funds need to be submitted to the IRS within 20 days of the closing, and it is the buyer's responsibility that these funds ultimately get into the hands of the IRS. In other words, FIRPTA is a prepayment of the seller's potential tax liability, but the buyer wants to make sure that these funds are withheld and get into the hands of the IRS in order to avoid any personal responsibility for not withholding FIRPTA and sending it to the IRS after closing. Now, you might wonder what type of properties are affected by FIRPTA. Well, FIRPTA applies to almost all type of properties within the United States: residential home, commercial properties, even vacant land. There are some exceptions to the FIRPTA withholding. One of the most common ones is the $300,000 exception. $300,000 meaning that if the sales price is under $300,000 and the buyer intends to live in the house, then FIRPTA could be avoided if buyer signs an affidavit at closing. There are also exceptions if the seller is a non-resident but possibly residing in the US for a certain amount of time. FIRPTA could also be avoided in this way. Now, how do you as the seller or the buyer deal if FIRPTA is involved in your transaction? Well, a professional who has experience with the FIRPTA transaction is going to go a long way. We very frequently work with realtors, with title companies, attorneys, and buyers and sellers who hire us to work with them throughout the transaction to make sure that compliance with the IRS is taken care of. Working with a professional is going to go a long way to making sure that the IRS gets the proper form, the proper amounts of FIRPTA withheld at closing, and is going to avoid any possible letters or penalties from the IRS. For example, we are frequently hired to prepare the FIRPTA forms 8288 and 8288A. These are the forms that are prepared at closing and sent to the IRS along with whatever the withholding amount was. We frequently prepare these forms and provide them with instructions to attorneys or closing agents so that the amount withheld at closing gets to the IRS within 20 days of the closing date as stated in the IRS FIRPTA guidelines. Now let's talk about non-compliance. If FIRPTA applies to a transaction and the buyer does not make sure that the withholding is done and that the forms are sent in, the IRS could come back on the buyer and enforce large amount of taxes and penalties for non-compliance. We want to avoid this at all costs. At the same time, from the point of view of the seller, who is the one who's subject subject to the withholding, it is extremely important that the FIRPTA forms are properly filled out and filed on time, and all this is going to go a long way in order to put the seller in a position to be able to claim back a refund of the funds withheld at closing. In summary, FIRPTA is a critical piece of a real estate transaction for a foreign seller and also a buyer who is involved in this type of transaction. Seeking the assistance of a professional is going to go a long way to comply with IRS requirements and avoid headaches in the future. Thank you for joining us today. I hope you found this information helpful. And if you have any questions, please make sure to reach out to us. We would love to assist you with any of your FIRPTA questions. See you next time.